Asia stocks slip, Greenback strong as Yuan weakens. Sydney Asian stocks slipped on Monday and the dollar extended its climb amid angst over global boom as most crucial banks hold raising rates, while a modest easing through China served only to focus on troubles in its assets market. U.S. Federal Reserve Chair Jerome Powell headlines a bunch of coverage makers at Jackson Hole later inside the week, and the dangers are that he will no longer meet investor hopes for a dovish pivot on policy. We anticipate a reminder that greater tightening is needed and there is still loads of development to be performed on inflation, but no specific dedication to a specific rate hike motion for September, said Jan Nevruzi, an analyst at NatWest Markets. For markets, a bland transport like that would be underwhelming. Futures are fully priced for every other hike in September, with the only query being whether it'll be 50 or 75 foundation factors. Rates are seen accomplishing 3.5% to 3.75% by way of year stop. A ballot of economists forecast the Fed will boost quotes by way of 50 foundation factors in September, with the risks skewed towards a higher height. One exception to the tightening trend is China, wherein the relevant financial institution trimmed some key lending prices by using among 5 and 15 basis points on Monday in a bid to help a slowing economy and a burdened housing region. Unease over China's financial system tipped the yuan to a 23-month low, at the same time as pressuring stocks across the vicinity. MSCI's broadest index of Asia-Pacific shares outside Japan fell in addition 0.6%, even though Chinese blue chips did control to gain 0.7%. South Korea's Kospi shed 1.3%, while Japan's Nikkei fell 0.5%, even though it has drawn help from the latest sharp reversal inside the yen. EUROSTOXX 50 futures lost 0.2% and FTSE futures 0.1%. S&P 500 futures eased 0.5% and Nasdaq futures 0.6%. The S&P 500 has repeatedly did not clean its 200-day shifting average around 4,320 and ended closing week down 1.2%. BofA's latest survey of traders observed maximum have been nonetheless bearish, though 88% did assume lower inflation through the years, the very best proportion since the economic crisis. That enables explain this month's rotation into equities, tech and discretionary, and out of defensives, stated B of A strategist Michael Hartnett. Relative to records, investors are still long defensives and quick cyclicals. He remained a careful undergo, given growing interest costs, and advocated fading in addition S&P rallies above 4,328. Yield spike. Equity valuations had been now not helped by way of a steep upward thrust in worldwide bond yields final week. British 10-year yields climbed via the maximum in 5 years following a surprise inflation record, at the same time as bond yields jumped on a sky-high upward thrust in German manufacturer costs. 10-year Treasury yields rose 14 foundation points over the week and ultimate stood at 2.98%, while the curve remained deeply inverted to reflect the danger of recession. U.S. The well-known air of world uncertainty has tended to reinforce the U.S. greenback because the most liquid of safe havens, leaving it up at 108.22 on a basket of currencies. Last week, it jumped 2.3% in its high-quality performance on account that April 2020. USD. The USD can tune above 110.00 this week if the August flash PMIs for the principal economies display a further slowing in economic boom or contraction in interest, mentioned Joseph Capurso, head of global economics at CBA, relating to surveys of producing due on Tuesday. We additionally anticipate Powell to supply a hawkish message approximately inflation, in line with current feedback from different Fed officers helping the USD. The Greenback become corporation at 137 yen and 25 sen, having shot up 2.5% closing week, at the same time as the euro was struggling at $1.0036 after losing 2.2% ultimate week. Minutes of the European Central Bank's closing policy meeting are due this week and are possibly to sound hawkish, since they decided to hike by 50 basis points. The upward push inside the Greenback has been a setback for gold, which became pinned at $1,745 an oz. GOL. Oil fees were also underneath strain, amid issues about international call for and the excessive dollar, as well as consultations among the United States and the European Union on Iran's reaction to the state-of-the-art nuclear P.C. notion. Brent become down $1.23 at $95.49, while U.S. crude lost $1.24 to $89.53 in step with barrel.